Okay, really quick. I just wanted to make a clarification on how I trade. I know I gave out the UJ trade, but I did want to make clarification on how I trade because I only generally trade the trend, right? So basically, me personally, me personally, after seeing or identifying this structure here, personally, I would be waiting for price to pull back to this zone here. I would not be trading the buy up, but I mean, that's just me. Um, so that's the 1 hour, and then let me go to the 15. And what I'm trying to do is just narrow this stop loss down to about 20 pips. So that is the push out. Let me put it here. Okay. So I would be looking for price to come up here. I would create my 20 pips. Okay. And then I would be looking for the sell back down to these lows. That is how I trade. Now, like I said, um, I I am expecting this buy up, but for me, like I said, I don't have FOMO. I don't have to go back and forth. One, I don't have time to go back and forth. I don't have time to look on the charts going back and forth. Once I identify my structure, I trade my edge. I go to that edge and I look for a supply and or demand zone. Now that my supply and demand zone has been identified, um, I then want to trade. I want price to come back up to this zone. If you don't want to set a limit, you can set an alert. Okay. You can set an alert. And once the alert goes off, then you can go down to I'm on the 15 minutes, so you can identify, well, I like to look for the hour. I like to look for 1 hour structure. Um, and then once that 1 hour structure is shifts, then I look for the same thing. I look for the last up candle before the shift happened. And then I mark that up and then I will let it go. So I just wanted to clarify that. Also, um, I wanted to talk about, I know someone asked me about um, hedging, and I know Todd talked about it today, but I think there's still some people who are unclear on hedging. So with that being said, and with the way that I trade, this was, say this is your markup here, right? And then this is your stop loss, 20 pips. And your 20 pips is at 152.932. So you would set your hedge at 152.9, 152.932. That would be your 20 pip hedge. You will set, so instead of setting a stop loss, when you enter this trade here, you only set the your entry price and then you set your TP, right? And then you'll set another order at the same entry price or at the same price as the stop loss you would have put if you were using a stop loss. So instead of using a stop loss, you just set another order at the same price and um and then your hedge, hopefully the hedge does not kick in, okay? One, you have narrowed your hedge down Now, if you feel like this is too close, then set a 30 pip stop loss. And then once you set the 30 pip stop loss, um, whatever. So this is what did I say it was? 152 15293. Oh, it's 931. 152931. 52931. Okay, there we go. I moved the wrong thing. So 152931. Now, if you want to add another 10 10 pips. So instead of 20 pips, you want to do 30 pips, you can do that. You would just add that. You would just create your hedge where the stop loss um, would be. And if price, now I do my hedge a little different than Todd's. I don't take away from my hedge because I know that price is, even if price came, tapped into your hedge and started selling down, right? So once the sell down starts to happen, then I'm getting in. That's when you can get in and start stacking, which would compensate or which should compensate for the hedge that you have in. This is always going to be my TP because I feel that price is coming here before pushing back up, that I will keep my hedge running until we push back up. You just have to remember you have to add entries. And what I mean by that is, for instance, say this was your hedge. Say this was your entry here. Okay. And you put your stop loss, you put your entry here. Let's say you put your entry, let's use this one right here. Say you put your entry here, you put your stop loss right above here, and this picked you up, right? And you know you're taking your price at least down to here. So now that you have this entry, the sell and the buy in, first of all, and this is what when I first realized what hedging does, it was fascinating to see. Okay. So once you pick up, your P&L is going to be only 20, a difference of 20 pips. So say um if you were risking $1 and this hedge picked up, your P&L is going to be $20 until you close out one of those trades. It's amazing to see. Okay. However, so say if you close it out, if you close the sell out here, then your P&L is going to be $400 minus $400, but you've also gained $400. So when I say this is when you can start stacking, right? So once price um, broke this low here, price never pulled back. So that wasn't a stack you could do. Okay. Um, it doesn't look like no up in here were no pullbacks unless you're trading imbalances. I don't trade imbalances. So, um, but and if you are, right? So once price got here, broke structure, what do you look for? You look for the supply zone. Price pulled back into that. That's your first, that would be a stat, right? Once price broke structure here, what are you looking for? You're looking for price to come back into your zone. Let me move this. Looking for price to come back into your supply zone where it tapped, and then you can take it. So you have this entry here, okay? And if you want to, what's that, 50, hold on. I think that's 53 pips. So you can either take that there or hold on to it. Hold on. Okay. And then once price came and broke structure past these lows, so that would have been 50 something pips, but it was only a 1% um, return. But once price broke your structure, you can continue, broke structure, you marked up your supply zone. And of course, on the 15-minute, this would be a little more, um, there's 40 pips. You can take it to the lows here. That's 60 pips. So you got 56 pips running here. And now if you even want to take it to this low, you have 95 pips here, and then you have 62 pips here. That's your 100 pips. But because you're stacking, you're adding to your equity, which pretty much cancels out the buy that tapped the into the hedge. Okay. You're pretty much canceling out the hedge. Let me just say that. So one as you are um continuing to watch the charts, as you are continuing to break lows, so you broke low here, right? And then what are you looking for? You're looking for the next supply and demand on and supply zone. So you have your supply here. Now, if you had put your stop loss here or hedge, but it it wicked. It didn't break above, it wicked it. So you could still be in this trade. So now you can take this down to this low once this break of structure happened, and this was the low, and this was the pullback, you can, and it wicked it, and then it started breaking structure. You can continue to follow, 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 follow. So now this is structure. And of course, if you don't trust your analysis or if you don't trust your analysis on these pullbacks, once you get in, you can always target, if you wanted to target the close of this imbalance, you could have done that. Or if you want to target the the um now one thing you can always target is the violated order block. Okay. One thing you can always target is the violated order block. Once price broke here, you can always pull back to the violated order block. This was the first one here, and then you have a order block with the imbalance here. And if you watch the chart enough, you'll know that price will come very close to your zone, pull back to make it appear as if it's starting to buy, but there's still structure that it hasn't bought, that it hasn't broken, higher time frame structure. So price could push up to here and then, like we said, push back down to this demand zone before taking off for the buy. So with that being said, if you wanted to target this violated order block right here, that would have been, um, where did that come from? That would have been 150 pips, 120 pips. And that would have definitely built the equity. So once you take profit, you are not over leveraging from the hedge that was picked up because we know it's going to buy back up. So that means you'll be in this hedge until price buys back up. And like we said, price may come here and then close back down to this zone, sell back down to this zone here, and then take off to um, start giving you profit from the hedge. I hope that makes sense. Um, if you have any questions, feel free to ask. Thank you.